Holla, holla, save, build it, sound money, sound money. All right. Hello, guys. It's Ugly Old Goat here. And I'm going to do a read through. I just wrote an article on Medium, and it kind of has gone over like a lead balloon. I think I'm probably all alone on this one. And I feel real comfortable with that. So this is probably going to be a home run when nobody agrees with you. That I like being alone when on an analysis. So, at any rate, the title of this is "Gold is Viable Bitcoin Competition," and which I think is very true. We kind of put some teaser on that, and I put the addition of the fundamental case for $17,000 Bitcoin and $18,000 gold. So that's a pretty wild gold prediction. Actually, I think it's more likely to happen probably than the 17,000 Bitcoin. But basically, we're going to look at it from a fundamental perspective and from basically a risk management perspective. Guys, this is open to the public. People that follow me and the members know that what I teach is, first of all, you cannot be a successful trader unless you're well disciplined and practice money management. So there's a secret to successful trading, and there's four secrets, and the first one is money management, and the second one's money management, and the third one's money management. And, if you think you know those three, you don't know the fourth one yet, because that's money management. It's that important, guys. It's the only thing that it's the only way you can get wiped out is if you don't, you'll eventually get lucky. As long as you can play the game, you'll eventually get lucky. So I think there's more to it than luck, but you can't have luck unless you can play the game. So, all right, we're going to go through and start reading this thing. Again, the emphasis on this is money management. The fundamentals that I'm going to outline are maybe, I'm sure, a bit unconventional. And we're going to address all the prevailing thought. And so my first question is, why is it that so many avant-garde Bitcoin techies are so opposed to gold, and old school gold bugs are so opposed to Bitcoin? Now, my view is that such judgments are usually tainted by self-interest, leading to political implications and consequences. The classic example is from two analysts who I respect deeply, Michael Saylor and Peter Schiff. These guys do some good stuff, guys, and they're both sound money guys. There's two links that you can hit those links and see. Just hit each one briefly. We'll look at the headlines. You can kind of good outline. Just all you got to do is hit the picture. Yeah, that'll hit the link. And okay, we're going to look at these MicroStrategy CEO explains why Bitcoin is 1,000,000 times better than antiquated gold. Just kind of sums it up real well. Go to the next link and we'll hit go back to the article, hit Peter Schiff. And so their Bitcoin critic, Peter Schiff, trashed the cryptocurrency, blasted the U.S. government, and what else did he blast? Scroll up.
Hold on.
Okay, scroll up a little bit.
That's it.
There you go. Yeah. Government warned of a dollar crash in a new interview. Here are the 8 best quotes. So those are just real summaries that summarizes their opinions. And so I'm not talking out of my ass here. This is the prevailing view. The top spokesman for gold and the top spokesman for Bitcoin, they're at odds with each other. And I think that's a big mistake. So let's go on to the article. These two sound money advocates, these are two sound money advocates, yet it seems an almost impossible task for otherwise sensible Bitcoin analysts to see gold as viable competition for Bitcoin, or for gold advocates to see Bitcoin as viable competition for gold. Bitcoin techies, and I mean by this mainly the guys, Bitcoin techies, I find for the most part, these guys understand the back end. A lot of them understand the economics too, but they really are, their emphasis is on the back end of Bitcoin. And they tend to have this more radical view, I think. But they tend to see gold from the Keynesian point of view that's a barbaric relic. And that's what Keynes said it was. And that's, of course, how we have fiat currency today, is because we're under the influence of Keynesian economics. while gold bugs seem to be unable to grasp the concept of the value imputed to Bitcoin. And, Bitcoin is just a number, but because it has properties of a number, we've been able to impute a lot of value to it to the point, it's worth between $40,000 and $50,000 now. So that's a lot of value to put to a number.
Wow.
But is the debate an either or proposition? I don't think so. And even a cursory look at scholarly material available does not allow for it. Saifedean Ammous, the author of Bitcoin Standard, argues that a return to the gold standard is an effective attack on Bitcoin. And so we're quoting from his book, with the increased volatility and availability of a reliable and relatively stable hard money international monetary unit, the incentive for using Bitcoin drops significantly. In a world in which government restrictions and inflationary tendencies are disciplined by the gold standard, it might just be the case that gold's first mover advantage and relative purchasing power stability would constitute an insurmountable hurdle for Bitcoin to overcome by depriving Bitcoin of the fast growth in users and thus preventing it from reaching a large enough size with any semblance of stability in price. Actually, I think a slow growth can accomplish that better than a fast growth. So I think that what I'm outlining here is I think will also kind of slow the growth. I don't think it's going to stop Bitcoin by any means, but I think it's very healthy to have a gold standard and a Bitcoin standard competing with each other. And I actually think the Bitcoin will help keep the gold standard honest. Two different things, both sound money, but for two different purposes. So let's examine this a little more. Now, this view is also supported by perhaps the greatest monetary theoretician of this age, and that's Friedrich A. Hayek. In an April 1986 article entitled Market Standards for Money, F.A. Hayek refined his thinking of his notable work, Denationalization of Money, and suggested that a private store of value, the standard, would be more likely to overcome the political obstruction to wholesale denationalization of currencies, but would be immune from use as a political tool. Wow, that's a pretty good description of Bitcoin, I think. Anyway, Hayek envisioned an index of a basket of commodities as the emerging standard because it would have had the implicit stability as a store of value from the get-go. He even named it. And again, we're quoting from Hayek from that article in 1986. The ideal name for the new unit of account, clearly making its function universally intelligible, would be the proverbial term standard, or rather obvious name, which, however, has so far never been used as the designation of a particularly monetary unit. Emphasis in the original. He named what he thinks is going to emerge as the standard. Yet Hayek did not anticipate its usage in retail trade. Oh, that was good. Good coffee. Thank you, Eddie. It seems probable that for a long time, the use of such a common international unit of exchange at least be used chiefly in wholesale or other large-scale transactions, although including also much expenditure on travel. So he thought of large transactions and traveling, basically people that do international business. I do not contemplate that the standard would be used as a pricing in retail trade. For local business, coins and notes, and even some checks or credit cards, the local currency may well remain indefinitely preferred. But I would anticipate that once such a unit exists, it will become increasingly the unit of long-term business contracts. Contracts will begin to be made in standards, the future value of which I suggested in the denationalization of money, that gradually the courts would come to interpret all contracts as intended to be expressed in a stable monetary unit so that the difficulty of uncertain value of contracts disappears. And again, the emphasis in the original. Now, my point is that sound money theory does not rule out a return to the gold standard, which has its original legal jurisdiction with roots embedded in the United States Constitution. It is the original fiat or decreed money of the state with a track record of 7,000 years, surviving multiple civilizations. And there's a picture of a Hayek half gold piece that was minted in 1984. That's actually a
Damn, a year
company.
before I was born. Wow.
And yeah, that's rated by the American Numismatic Institute, the ANAC's rating of 69. 70 is perfect. So that's about as good as you can get. And very few coins.
Is that how they rate them?
Yeah,
By-
they
by
grade them
numbers?
by number 69. The highest rating you can have is 70. So
Oh,
this is,
wow. So
yeah,
you
and
were
this is,
top notch then.
yeah,
Huh?
this is well, we don't know of any other
What does
non-government
PF
coin.
mean? Perfect.
Yeah, I'm not sure. Proof, I really don't know. But
Something proof, right? That's why it gives you that. Oh,
it's just I don't know I don't know what the PF means, but I know the 69 PF 69 is right
top
up,
notch.
uh, and you can see that in the coin. You see the mirror finish and everything. But here's what the Constitution says about money power of the government. From Article 1, Section 8, there is Congress shall have power to coin money, regulate the value thereof, and of foreign coin. And from Section 10, no state shall make anything but gold and silver coin a tender in payment of debts. Nothing but gold and silver shall be legal tender in payment of debts. And this is powerful. So much so, this is not lost on the Bitcoin techies who were instrumental in the passage of the Bitcoin fiat money in El Salvador. Now, people aren't going to like me to call what I just called Bitcoin fiat money, but essentially, once you declare it legal tender, now you have made Bitcoin into a fiat money. Fiat means to decree, and when you decree that Bitcoin is legal tender, it now is no longer that free money that we thought we had, but now it actually becomes a decreed money. So there's a couple articles that the legalization finally went through. There had to be a passage of time, but now it says Bitcoin crashes.
Oh, on the first day.
Yeah, but that's not a big deal. That's not the issue. I think the issue is that a lot of people keep scrolling down. I think that's the article. You have a lot of protesters. It's not popular. It's only like 20% of the people think it was something that should be done. So it was not done through a popular vote or anything like that. It was basically, imposed.
Oh, wow.
Yeah, through. So it's got a little bit. It's got what you've done is you entered the political realm now, and they're
Oh,
really.
yeah. There they
I
go.
don't
Now
think that you needed it.
look at that. No
Yeah,
Bitcoin.
yeah, yeah. Yeah. So what happens is what happens once you declare that legal tender. Now rather from being an economic thing, we're going into a political thing. You got a political obstacle that now you have to overcome. And here's an article done by American Institute for Economic Research, and that kind of outlines some other things. But we can move on, and they just show that the challenges and the problems that are ahead. So let's go on and read the article. You guys can read that on your time. I'm not going to read all these articles. Those are some great links. So, okay, the political implications and consequences of playing the legal tender card. And that's what they did. Basically, we had some people go down and in cahoots with government and some private enterprises, they declared Bitcoin legal tender, and they're setting up a Lightning node for it. Now, rightly or wrongly, that's what's been done. So we need to look at the consequences and the implications, because it does have a lot. The stage is set for a David and Goliath fight to the death. And yes, fiat, even Bitcoin fiat, does that. Once you declare something, this you got to use, not everybody's going to agree with you. so not on an economic stage, but on a political stage. And it will likely play out in a classic pushing the string on the political paradigm. Now, pushing a string, if you notice, when you push a string, it doesn't go anywhere. And that's sort of, I think, is where we're at in the political. They've got a real, I think they're pushing the string. This could end very badly. Hopefully it won't. And we'll just see. But I kind of view it as they're pushing the string. But I do think one of the things it does, while El Salvador monetary declaration is a guide string pulling the nation, I think that they're trying to pull the nation towards sound money economically. But I don't know that they needed to do that through legal tender. I think that's the issue. Now that they've declared it as legal tender, it is a political football. And the very real challenge is in the political arena. The old adage remains true. He who has the gold makes the rules, and he who has the guns gets the gold. Well, the guns can't get Bitcoin. Checkmate. So there is a difference here, guys. They can get the gold, but they can invade. The United States Marines can invade San Salvador, and they can't get the Bitcoin. It's not like they can seize their physical gold. They gotta, except perhaps by torture, but there's a ways around that where you can, the guy that you're torturing doesn't know because he's only got it, a third or a fourth of the keys. So basically, you do have a standoff on that. That's the plus side. Okay, so but does the end game draw hold the guns at bay? Well, it would be interesting to see how a free market evaluates the life insurance premium for El Salvador's president Nayib Bukele. Now, our prayer is that fisticuffs are avoided, but it's by no means assured. This is most likely going to have some. It could get bloody before it's over with. I hope not, but that's what once you go the political route, that's what happens. In fact, it can happen without going the political route. So maybe it's worthwhile doing. I'm not going to be a judge of that either. But whether the legal tender is a good thing or a bad thing, it's a Pandora's box. It's already happening. So it's just going to be interesting to watch it unfold. But the legacy toolbox includes the IMF, the World Bank, the Federal Reserve, existing treaties, tariffs, embargoes, the CIA, and the United States Marines. And that's just to name a few. SEC, we've already been seeing that. CFTC, all these things get in it too. A more peaceful and effective attack on Bitcoin is the restoration of sound money through the adoption of a gold standard. Governments and citizens hold gold as monetary reserves that hang like an unseen sword of Damocles over the Bitcoin market. Just as avant-garde Bitcoin techies have played the legal tender card in El Salvador, old school gold bugs. Now listen to me, you old school gold bug, you old farts. The baby boom generation, the boomer generation. You have the opportunity to play the same card in the legacy markets now, okay? The Bitcoin techies will have no cause to complain. Yet would they support such measures to restore sound money through legal tender laws they have embraced? Well, I would hope so, because if they're consistent and if Bitcoin is anti-fragile, and I think it is, then such an attack should be embraced. And I support sound money, whether that money is the Bitcoin standard or the gold standard. In fact, I think if you have two sound monies competing against each other, it's only going to get better. I think it'd be a great thing for it to happen. And it might just happen, guys. I'm not ruling that out. My point is simply that sound money can be restored with an end run around Bitcoin if there is a political will to do it. Further, according to Hayek, a private Bitcoin standard competing with a fiat gold standard will be a very healthy development and can change the paradigm towards competition in currencies. Let's go down. All right. And there's an article I wrote you can read on competition currencies. You don't have to click on that. They can do it on their time. Now, my purpose is not to espouse my preferences or to predict the outcome, because we don't know. But I'm analyzing some very real macro risks in the marketplace, risks that few, if any, analysis have seriously considered. Institutional Bitcoin investing is not inherently bullish. Boy, I think I'm pretty all alone on that one. Everybody thinks that MicroStrategies and Elon Musk and all these guys buying Bitcoin, and it is for the short term bullish, but actually in the long run, it's quite the opposite. It's the case. Bitcoin is designed to work well apart from legacy systems, and legacy participation in the last half of 2021 and the first quarter of 2022 quickly changed the fundamental market structure and dynamics of Bitcoin. The March 2020 COVID panic low of 4,000 reversed to achieve an April 2021 high of $65,000. What was a 15x rise, guys, followed by over a 50% tumble in value to under $30,000. Now, there's no way you can think that Bitcoin is a store of value or even decent cash. You can't have that kind of volatility, and it's not. I mean, just ask anybody that bought Bitcoin at $60,000 how wonderful, what a wonderful store of value it is. You know, you have to have a long-term perspective, and yes, it is. So long as you know we're as long as the Bitcoin march continues. It does not necessarily follow that legacy system Bitcoin participation bodes well for Bitcoin. The value of Bitcoin is not dependent on legacy participants. Now, this is a feature, not a bug. Should legacy institutions gain the upper hand in Bitcoin, by definition, this HODL is now part of the legacy system. In other words, as they accumulate this Bitcoin, they are part of the legacy system, guys. And so if you have Bitcoin on one of these legacy systems, you don't have Bitcoin. You have Bitcoin on the legacy system, which can be seized and taken from you, in either by the government or by the trusted third party where you put the Bitcoin. Legacy players will give up this Bitcoin to the prevailing authority in a heartbeat if it's to their advantage. And you guys, that's just the case. That's the way it's going to be. They have to, because they've chosen to play by the rules of that jurisdiction. And once you've done that, then you are committed to it. And not to your customers. If the government comes in and says, well, we want your Bitcoin, what are you going to do? Oh yeah, they'll reward you for it, because you can be the collector, just like you can be a tax collector for the government. You can collect Bitcoin for the government someday. I mean, I'm not saying it's happening, but you need to understand
It can.
It will. I mean, the whole thing is Bitcoin is made to be apart from the legacy system, not be incorporated in it. So I don't get it. A lot of the stuff that's going on here. I mean, I get it, because, once you got a little partnership with El Salvador and the other country, you got in the foot of the door and you do things other people can't. That's what legacy systems are about. So not your keys, not your Bitcoin is applied for Bitcoin held under the regulation of legacy jurisdictions. Hey guys, if you don't get this, I can't help you. Okay. It's very fundamental. And it's not good for Bitcoin, but it's going on. So that's all I can say. And it's not necessarily bullish on Bitcoin. I don't think so at all. In fact, quite the opposite. Nor does it necessarily follow that Bitcoin fiat money in El Salvador bodes well for Bitcoin. Centralizing decentralized money is just a tad bit contradictory, nor does it necessarily follow that Bitcoin bodes well for El Salvador. Can El Salvador become the economic miracle of the 21st century? Well, I hope so. But playing the legal Tinder card has opened a Pandora's box of political consequences and implications. And without concurrent relearning of the lost art of commercial banking, and if you hit that link, you can read Colonel Harwood, Edward C. Harwood's outline of the lost art of commercial banking. If you want to know what that is, it was actually something like Bitcoin that emerged. That was the peak of the gold standard during the Gilded Age in the late 19th century. Bitcoin will continue to be suck as cash and be a lousy store of value, lending plenty of ammunition to vocal political opponents. And that's what you're seeing going on right now in El Salvador. Sound commercial banking emerged without decree. It worked so well, it was quickly nationalized. It actually emerged in the marketplace by merchants and for merchants, and they quickly, formed banks, and they learned the art of creating non-inflationary purchasing media or self-liquidating commercial paper. And again, that's outlined in that link to sound commercial banking. At the very least, few are objectively looking at these fundamentals from the point of view of risk management. Legacy players, institutions, and governments will play the hand they're holding. Hint, it's not Bitcoin. These guys don't have Bitcoin. Very few businesses do. In fact, most entrepreneurs don't. The asset that legacy investors are holding is not Bitcoin. It is the partnership through licensing, incorporation, compliance to regulation, tax collections, tax favors, fiat money access, and other privileges that only legacy participation provides in particular jurisdictions or nation states. And each nation state has their own little rules and privileges and way of rigging the game. This privilege is a means to an end. An edge is available is unavailable with Bitcoin except with legacy participation. So basically, you can get no edge as long as you're in Bitcoin, but once you're trying to get an edge through legacy participation, which that's fine. I don't have a problem with that. That's fine. That's how the markets work. But you need to understand that that's what it's about. So, and it's not your Bitcoin, that Bitcoin that you have on the legacy markets. It's not your Bitcoin, not until you get it off that legacy market and get it into your own private wallet. The bottom line is that legacy participants' first priority is to perpetuate their legacy partnership and privilege. The first priority is to the grantor of privilege or the state. The legacy markets are free only within the chartered parameters granted by each jurisdiction, which means legacy Bitcoin hodls are ultimately used in a way to pay homage or tribute to those granting such power. Okay, these are all just truisms, guys. That's the way it is. And you may not like it, but that's the way it is. And that's how we're analyzing this. The unbanked are unbanked for a reason. Well, while banking the unbanked is a noble idea, most unbanked are unbanked for a reason. While this altruistic motive makes good copy and tugs hearts, it makes no economic sense and it has no precedent. However, banking unbanked entrepreneurs does have precedent. Sound commercial banking and the development of self-liquidating commercial paper emerged for merchants, by merchants, and for merchants, and for the benefit of merchants. Banking was created for wealth producers to ease the difficult task of financing this wealth creation through the creation of non-inflationary money creation, representing this wealth indexed to the prevailing standard and regulated by the marketplace rather than by decree. Cash is a banking mechanism devised for the consumer as a convenient way to convert labor into the new wealth offered in the marketplace by wealth creators. The term seigniorage comes from the right of the king to coin money to be used in daily commerce with an intrinsic value less than the face value, providing a legitimate government revenue source without taxation. The innovation of self-liquidating commercial paper combined with government coinage, both indexed to gold, was the innovation of the gold standard developed during the Gilded Age in the late 19th century. Whether the standard is gold or Bitcoin, once established as the standard is no longer useful as cash, but is used in wholesale and large transactions. Hayek's view that the standard will not be used as cash, but off-chain standard substitutes will emerge as cash, much like we're seeing Bitcoin today via Lightning Network. It's based on a solid foundation in both theory and practice, and confirmed in the unique historical, and this whole thing is confirmed through the unique historical circumstance of the California gold rush. Okay. And you read this is a great article. It goes through the whole history of the California gold rush. That was a situation where gold was plentiful. It was actually used as cash. Gold was not being used as cash in the rest of the world. I mean, they had gold coins, but they didn't circulate. They were held as reserves, banking reserves. The only place where gold circulated freely as cash was where it was plentiful and everything else was dear. That's a great article to read. I wrote that few years ago, and basically it was to counteract the crap that Roger Ver was putting out. The next sustainable move in Bitcoin, or what some identify as hyper-Bitcoinization, will not come from banking or the unbanked or institutional buying, but by educating established entrepreneurs without Bitcoin. Again, this is a much stronger base too. I guess maybe I have my hope in reality, but I really think that's where the hope is too, is that we want to have as many entrepreneurs in there learning to use Bitcoin. And if you have Bitcoin, of course, what you do is you hodl it, and then you're saving other assets. Like we built the studio, and or we've got my hobby are these cars, these four-wheeler cars. And then you build things like we're building the studio. That's building. So you hodl, you save, you get other assets, and then you build. Whereas if you don't have Bitcoin, you have a business, you're building that business. You want to save the Bitcoin, and then you want to hodl that Bitcoin that you save. Now, once you get your hodl, then you kind of go the other way. So it's not a question of just having a Bitcoin hodl that grows and grows and grows. It's actually no, it can fluctuate upwards and downwards, and you adjust it accordingly. But hopefully, you are trading in for other assets. When I first started out in Bitcoin, we didn't have we rented a place, and now we've got 5 houses. So that's how it works.
From Zorrillo all the way down here, huh?
Yeah.
All the
So
way to
the
the
world
suburbs.
economy is a train wreck. Okay, guys, that is for sure. If I don't think there's an argument with that by anybody. Maybe there is, but whether by incompetence or deliberate design, the world economy is a train wreck happening in real time. The debris field is spreading rapidly as passenger cars collide, they decouple, overturn, they spin around while decapitating and delimbing the passengers on board, which is us. There is no way to assess the damage while the carnage remains in motion. Dodging personal damage is only possible to the extent you are isolated from the legacy system. Guys, I've been hurt during this thing on different aspects of the economy. So is everybody. We're in the middle of this thing, and it's not getting better. It's getting, like I say, I think the train wreck has just started, and till it's over with, we don't really know how any of us stand. It's just terrible to making sense of the economy at all. A Bitcoin hodl is certainly one way to minimize the damage, but as the train wreck has just begun, the collateral damage can be such future hardship will be unavoidable even for the best prepared. So Bitcoin, will help you, but it's not end all to end all solutions. Bitcoin, I know there's a group out there that does Bitcoin fixes this, and that's a really good podcast, but it doesn't fix everything. I really tempted to do some, but Bitcoin does not fix this. There's a lot of things that need to be fixed apart from Bitcoin, but Bitcoin is certainly a very useful tool. Those who hold a majority of their wealth in their home and legacy retirement account are especially vulnerable and are sitting ducks for seizure and confiscation. There will be a coming flight to safety with nowhere to go. I cannot emphasize enough. You must prepare for the coming storm now. Later will be too late. I pray I'm wrong. I really hope I'm wrong, guys. And I'll take no pleasure if I'm right on this one. Bitcoin banks are a train wreck waiting to happen. We have an economy that is in the middle of the train wreck. And now I think you have these Bitcoin banks. They're a train wreck that's going to happen later down the road. It's a sad state of affairs that the primary banks for Bitcoin are trading exchanges. Yes, you can trade Bitcoin. You can purchase and sell Bitcoin. Exchanges operate as an efficient on and off ramps to and from the legacy system in Bitcoin. The weakness of the exchanges is that, with few exceptions, the emphasis is not to develop Bitcoin as a financial asset, but to collateralize trading other real assets such as gold, silver, bonds, and securities, but is primarily to speculate on shitcoins and other unsound virtual alternatives. Monetary theory forecasting the emergency of one private monetary standard is in contrast to the current model of competing standards. The latter is likely to be unsustainable. And I do think Bitcoin will emerge as the hands down victor, and everything else will be very, very small percentage. But that's not the case right now. While in the past there have been very real risks dealing on unregulated exchanges, the risk is now shifted to systemic risk that is inherent in regulated legacy exchanges. The adage, not your keys, not your Bitcoin, has been shifted from the exchanges to the legacy system itself. So I think for the most part, the exchanges are sound. I mean, you're still going to have some that are going to go under, but most of them are run much better. I don't think that was anything that regulation did. Regulation came later. I think that was already changing, and then the regulation kicked in. But there's still a lot of unregulated exchanges, and they're doing just fine. In fact, I think BitMEX is a star example of an unregulated exchange that really offered market innovation. And of course, they tried to shut them down and couldn't, although we'll get into that in a bit. Bitcoin dominance reflects less than half of crypto participants believe Bitcoin is the emerging standard, or that the competing standard model is flawed. Exchanges are currently operating without an agreed Hayek standard, and hence are lagging in providing sound banking alternatives. The cutting edge innovation on exchanges has emerged in unregulated markets, unregulated Bitcoin only exchanges. And while Bitcoin has assured the survival of such exchanges, the world's policeman has done its bidding for regulated exchanges and central banks by singling out individual challengers to the status quo. And there's an article I wrote on this, managing the exchange risk in the coming Bitcoin world. And that's of course a picture of Arthur Hayes from BitMEX, and you see the four guys behind us here are the other four people that were indicted. The government could not shut down their exchange because it was a Bitcoin exchange, and they believe me, they would have if they could have, but they can't, and so but that doesn't mean that they can't come after you personally. And then here's a really good article written by Forbes himself on Bitcoin warning. Are we headed for a cryptocurrency war? And I would encourage you to read that because I thought he did a pretty good job. And Stephen Forbes is an old gold bug, so he understands sound money. Legacy systems have the power to impose gold as legal tender as the legal tender standard. And because governments hold gold reserves, it is in their interest to do so. Okay. So they, governments still have gold, guys, and so do a lot of individuals. And I don't think we're there yet, but I think the day may be coming soon that it may be the only choice these governments have available as they realize, what, we're going to lose this whole thing if we don't get sound money back. And the only way we can get sound money back is to go with what we have reserves in, and that's gold. By doing so, the shift will not be from gold into private Bitcoin, the private Bitcoin standard, but rather Bitcoin into more, scroll up a little bit, into more, the more useful public gold standard by playing or threatening to play the gold legal tender card. And I would like to say, probably it's not an either or situation. It's just that I think there'll be a balance. I think that gold has a purpose for it's physical, just as nations are physical. They have borders. Gold has parameters. It's solid. It's like, and so this whole thing, Bitcoin has this wonderful it's ethereal and has this wonderful thing that knows no borders, and you can transfer wealth without borders. Gold is much more difficult to do, but it's very good to have locally, and it just needs to be held in a reserve, for banking. That's the way it was done. That's what they figured out, with the emergence of the gold standard, and the gold standard evolved through sound commercial banking. So it's not just denationalization of money. It's not just free market money, but you also have to have a free market banking to accomplish this idea of, sound money. And I think that a gold standard concurrent with the Bitcoin standard would be very healthy for both, and kind of the best of both worlds. But even here, a secondary, technical situation. Now, while I emphasize risk management as the key to consistent trading success, followed by fundamental assessment, the last consideration, and by far the least consideration, is the technical situation. So I'm going to go outline the charts and the price action and so forth, and the way I'm looking at the tech. Now, thing about technical situations, you can look at the same chart and have as many different opinions as people, but these are very, I think, a common way of chart analysts. Fundamentally, my point is that a COVID type sell-off like we had in March 2020 is still a very real possibility. I'm not saying it's going to happen, but it's there and it can happen. And whether such a situation arises from incompetence or by design is really irrelevant. The point is that if you break down below 30,000, you can have a very rapid sell-off to under 17,000. And it just can't be ruled out. You just go down and look at that chart. You'll see those three prongs right there. at 30,000. Now, a lot of people are very bullish here and they think the market's just going to keep right on going up. And that may well be. I don't know. But what I teach is, you know what? I have no idea where the market is going, and neither do you, or neither does anyone else. But so you have to measure the risk. I own Bitcoin keeps going up. I own Bitcoin, but how's it going to affect you if we don't keep going up? How's it going to affect you if we go into, a bear market and we spike, we have another thing like we had back there last March and drop this baby down to under 30,000 and then go down to under 17,000? Very real possibility. Can't be ruled out. And it would be silly for anybody to rule it out. And now that's not saying that it's going to happen. I'm just saying that as you trade, you always want to look at the worst case scenario and not the one that you want, but the one that you don't necessarily want. Okay. Now, in contrast, we've got predictions of, and I remember in the 1980s, I'm 72 years old, so I was around in the late 70s and early 80s when Doug Casey and a whole lot of others were predicting gold was going to go to $3,000. Well, it never went past, I think, it spiked up to 800 one day and then dropped and then went back up to about $650. But essentially the high was $600 to $700. One day it traded at 800 when the Russians invaded, in fact, Afghanistan. But I think now $3,000 gold will soon become reality. Well, with
so?
Yeah, it's coming with the amount of money they printed. It's inevitable. But it actually has a possibility for a tenfold increase to 18,000. And the reason I outline that is it has a decade long cup and handle formation. We've actually traded between these highs at 2000, between 2010 and 2021 now. So it's been a whole decade. And you can see that in that chart that you're looking at. You see that great big 10-year cup. And now you've got a right handle. Now it's not confirmed until we hit new highs in the gold market. But once we do, then we are off to the races. And I think 3,000 is very conservative. I think the way you traditionally measure those things is you take that 10 years and you project it upwards, and that's going to take you, up to 15 to 20,000 range. I said 18 but I think that's certainly a possibility, which is a tenfold increase from where it is today. Now, again, I'm a successful trader. I don't make predictions, but I constantly assess the long and medium term possibilities. So my conclusion is that from a risk management assessment, a bear market, Bitcoin sell-off to under $17,000 cannot be ruled out. By the same token, an excellent case can be made for a 10x rise in gold prices. These are not predictions, guys. The question the prudent trader asks himself is not where's the market going, but will you be prepared if it goes there? So I hope this helps, guys. This is what I teach. This is the way I think. This is the way I trade. So if you are listening to me for the first time, we have a website, uglyoldgoat.com. It's free. My articles, we start them out on Medium, and then we convert them and put them on that website. So they're available. If you don't want to spend the $50 a year for Medium, you can get them off the website. They're not, we update them about once a month or so. If you like my work and you want to support it, we do have subscriptions available at the link below. It's not cheap. I started at a tenth of a Bitcoin when Bitcoin was $3,000. And so actually you could get a lifetime membership for $300. I haven't changed. I'm not changing the price because I'm really not, I don't care if the membership grows. We've got such a really great trading lounge group. And whenever we get somebody new in the group, we kind of have to bring you up to speed. So I'm not really looking to grow that. If you can't afford a tenth of a Bitcoin, you really shouldn't be trading anyway. So, and basically what you get with that is I started this website back in right there in 2019 and started publishing my trades with 2 Bitcoin, which was about $7,000 at the time. And so far taken out over 70 Bitcoin. which is over $3 million. So and these are real trades, guys. If you get a membership, you'll actually get those on a CSV file. People have done all kinds of things with them. We found out things that I didn't even aware of. For example, 7% of my profits comes because I'm a market maker. I get paid, because most of my trades, 95% of them, I'm making a market. Very, very rarely do I get stopped out or use market orders. But it's 1/10 of a Bitcoin for the first year, and that includes all my trades since February 2019, along with all the other member benefits. And the renewal is much less. Again, we used to do this lifetime member, but now actually we charge you. So it's initially about if you use a link from one of our members, guys, there'll be people on Twitter that'll send you a link. You can get 15% off that price. And then that'll be for the first year, and then you renew it at 0.01, which of course would be about $400 a year. I am doing something special too. If they sign up for a membership, we're going to give away one of these Bitcoin Standard staffs.
Oh, really?
Yeah.
We are. Oh,
Yeah.
oh, wow.
I'm going to
All
take
right.
some. I'm going to be going to Dubai, and I decided, well, we need to do some promotion for that. So I thought I'd do it in Dubai, but I'll offer to anybody that's listening that, you want to follow me, you want to become a member, we'll send you one of these Bitcoin Standard Bearer staffs, which we sell them for $400, but you can see them back in the background, and we got them so they have a little light on the end of it, and they're kind of a cool little thing to have. Well, you'll get a stand with it too. So are those stands made yet?
Yeah.
Okay. Okay. What are you trying to do here? Okay. All right. Well, there's the link to the website, guys. And then I thought I have a disclaimer. I'm going to go that and I'll read the disclaimer. I am long gold right now, and I did that on an exchange called Evolve. And the reason I do it there is because you can actually use Bitcoin as collateral to take a speculative gold position. I don't need to do that. I want to scroll down on the article. We'll go there later. Go back to the article. I didn't finish it. Scroll down. Okay, I want to disclose this. Okay. Ugly Old Gold is I'm currently long gold using Bitcoin as collateral at Evolve Markets. Okay, Ugly Old Gold endorses no exchange, as exchange risk is very real. However, if you use the link that I have below, you do get a 10% discount on trading fees for 6 months, and I get a residual. So if you want to, that's another way you can support my work. If you like what I'm saying, if you think that, gold has a potential to really go up from here, and I do, then we have found that Evolve Markets is probably the best way to do it, particularly if you want to use Bitcoin. There are some little idiosyncrasies you need to learn about it. There's a funding and so forth on it, but we can show you the position that I have on. I actually just bought gold the last week or two. I have an average price. There's my position. Ugly Old Gold. You can scroll down a bit, scroll down. You can see I actually had a balance of about a little over a third of a Bitcoin, and my average price is about 1792. I have nine means I have 900 ounces. So I actually have about $1 million, I don't know, $600,000 worth of gold. And I'm highly margined, guys, because right now my account's at a half a Bitcoin. So I got 25,000 and I'm margined $1 million, $600,000 worth of gold. But I do think I think this breakout today is probably legitimate. I hope you don't get the opportunity to buy it where I bought it. Although when I published this article, you could have bought it for days. In fact, this morning it was down under there. We bottomed out today. It looks like 1784, and we finally rallied above 18. And so I think we're getting ready to really turn this thing. And I think once we hit the contract highs, you're just going to be off to the races. And I think gold is highly underrated right now. I do think it's going to reemerge as the only competing standard against Bitcoin. And so I like Bitcoin and I like gold. So the way I like to trade it is I use my Bitcoin as collateral to buy gold and hopefully earn more Bitcoin. I haven't bought Bitcoin, guys, since I think 2016 was the last time I bought Bitcoin, because I trade Bitcoin and I make my money trading. So and it's all there for people to see. Last year I actually had an outstanding year where I started with just half a Bitcoin and ran it into over $1.5 million. So I ran I don't know, it was less than half Bitcoin, 0.25, but I had to add 0.25. So I had half a Bitcoin, and it was down there about $4,000, and I ran it. So I started with about 2,000, less than $5,000.
4,500.
Yeah, and ran it into $1.5 million, 47 Bitcoin. So, I mean, I've got a tracker that speaks for itself. This year, I'm not ahead this year. But what I teach is, guys, if you can sit and trade all year and break even, you're on the way to success. Now, the year's not over with. The last time I was this close at not making money was 2018, and I traded I was I was in the top 10 on Bitcoin BitMEX notational in 2017, and then 2018, so I'm where I was today. I just couldn't make any money, and then the last 6 weeks of the year, I turned 2 Bitcoin into 22 Bitcoin. So by actually going short the market. So right now, this is my position. I really believe in trading very small, and then I've consistently taken a small amount and turned it to a large amount. And by doing that, you avoid that big downturn. What kills people is the downturn. If you want to get on the Medium or onto our website, you can read all kinds of articles that I talk about it. I have all kinds of trading strategies. One thing that I believe is there's a lot of large traders that become small traders. And it's unbelievable how many of them. I mean, I've known a lot of them, and they're out of the market right now. And then there's others that are small traders and stay small traders. And then there's those that are small traders that become large traders. And the wise large trader chooses to become a small trader again. And that's the way I do it. Now, I'm sure there's other ways, but otherwise, and it's hard to do that, because if you're used to, throwing around big numbers and you just took a hit, you want to throw around big numbers to get it back. But I found just the opposite is true. And part of a position too is not trading. There's times when you just shouldn't trade. And so I'm not trading right now in Bitcoin. I do have my hodl, and I'm using that hodl, a small part of my hodl, to purchase gold. So we'll see how that works. Guys, if you like that, and you just consider doing that trade, please consider signing up with Evolve using that referral code. It helps support what I do. And that's it. If you want to become a member, check out the Twitter. I'm sure we have some members that'll send you their link. You can get a 15% discount. So instead of paying 0.1, it'll be 0.085 for Bitcoin membership. It has all my past trades since February 2016, and we'll send you one of these Bitcoin standard bearer stats. So glad you tuned in. Do we have any questions or anybody on?
No.
Okay. Well, that's fine, guys. Thanks for tuning in. Hope you enjoyed it. I hope you enjoyed the read through, and
See you next time.
yes, good luck on your trading. And